Welcome back to Explain the Charts, everyone. Today, July 30th, 2025, we're diving deep into QQQ, the Nasdaq 100 ETF, providing an in-depth analysis of both the news and the chart data. Looking at the daily chart for QQQ, we observe a consistently powerful long-term uptrend that has dominated market sentiment since early 2024, pushing prices to new all-time highs. This sustained bullish momentum reflects robust investor confidence in the technology sector, a key driver for QQQ's performance. Despite this overall strength, the chart reveals periods of sharp corrections and significant volatility, hinting at underlying market sensitivities. Let's integrate recent events from our comprehensive Google searches and website information. The market's immediate focus is acutely tuned to the impending Federal Reserve decision, which holds significant sway over interest rate expectations and overall market liquidity. Furthermore, critical earnings reports from tech behemoths like Meta and Microsoft are just around the corner, poised to set the tone for the sector. This confluence of major catalysts is likely fueling the current cautious sentiment, as evidenced by the S&P 500 and the broader Nasdaq composite recently retreating from their record highs on July 29th. The ongoing discussions regarding a China-US trade truce, currently described as in limbo, also introduce a layer of geopolitical uncertainty that investors are carefully watching. On a more encouraging note, positive developments like NVIDIA's recent price target hike provide a strong bullish signal for individual components within the Nasdaq 100. Additionally, Nasdaq's strategic partnership with AWS for new market solutions underscores continued innovation and long-term growth potential in the industry. Now, let's zoom in on a particularly telling segment of the daily chart, specifically from late March to mid-April 2025. During this period, QQQ experienced a dramatic bearish reversal, plunging sharply from levels around $470 to a significant low of approximately $402 to $408. This high-volume sell-off, which represents a substantial short-term downtrend within the broader bullish context, was likely triggered by a significant market event or shift in macroeconomic outlook. However, the quick rebound from this 402 to 408 range demonstrates its strength as a critical long-term support level, showing strong buying interest at these depressed prices. Returning to the full daily view, we can clearly see the impressive recovery and sustained ascent post-April, with QQQ steadily grinding higher. As of July 28, 2025, QQQ reached a new recent high of $568.14, pushing towards previous all-time highs for the index. This consistent upward trajectory, despite minor pullbacks, underscores underlying demand and a strong bullish sentiment in the market. Immediate resistance for QQQ now lies just above these current levels, around the $569 to $572 psychological and historical high points. On the support side, a robust immediate area is identified around the $540 to $545 range, which served as a crucial bounce point earlier in July 2025. A deeper, more significant support level, should a larger correction occur, can be found near the $510 to $515 mark, a region that proved resilient during a pullback in February 2025. Shifting our focus to the one-hour chart, let's analyze the price action over the last few weeks to gain a clearer understanding of the more immediate trends and intraday dynamics. From early July, we observed QQQ consolidating momentarily around the $555 to $556 level before resuming its upward trajectory, signaling continued strength. Minor intraday pullbacks, such as the one on July 10th where the price dipped from $556 to $554, were quickly met with renewed buying, reinforcing the short-term bullish outlook. The ability of the market to absorb these corrections, even on increased volume, demonstrates resilience and prevents deeper declines, indicating healthy price action. This hourly perspective confirms that while the overall direction remains strongly positive, there are regular, albeit brief, periods of profit-taking that provide opportunities for new entries. For the most granular insight, let's examine the 15-minute chart, specifically highlighting yesterday's trading session on July 29, 2025. After an initial period of strength, QQQ faced noticeable selling pressure, dropping from an intraday high of $572.11 to close at $567.26. This intraday decline aligns perfectly with the news reports indicating that both the broader Nasdaq Composite Index and the S&P 500 were slipping from recent record highs. The surge in volume during these downward movements, particularly pronounced after the market open around 1320 Universal Time Coordinated, strongly suggests institutional profit-taking or defensive positioning ahead of key macroeconomic events. This indicates that short-term traders are highly sensitive to upcoming catalysts like the Fed decision and major earnings, preferring to reduce exposure. For today, July 30th, immediate short-term support to watch is precisely yesterday's low around $566.53. A decisive break below this level, especially if accompanied by heavy volume, could signal further short-term weakness, potentially testing the 564 to 565 region. To summarize our in-depth analysis for QQQ, the market's immediate trajectory is heavily influenced by the impending Federal Reserve decision and the crucial big tech earnings reports. This environment calls for heightened awareness, as significant volatility and rapid price swings are highly probable. For a bullish continuation, a sustained breakout above the $572 level, ideally supported by strong buying volume, would pave the way for new all-time highs, potentially targeting $575 or even $580. This outcome has a moderate likelihood, provided the Fed's stance and upcoming earnings news are predominantly positive. Conversely, if negative news emerges, a clear break below $566 on increased selling volume could lead to a retest of the 560 to 562 area, or even the stronger 550 to 552 support zone. This scenario also holds a moderate likelihood, especially if macroeconomic data or key earnings results disappoint market expectations. From a long-term investment perspective, the overarching bullish trend remains intact, suggesting that substantial pullbacks, particularly towards the $540 to $545 range, should be viewed as potential buying opportunities. The critical long-term support at the $402 to $408 level, established during the April 2025 crash, serves as a major line in the sand. A breach here would indicate a severe, unlikely trend reversal. The likelihood of hitting this deep support is very low, barring extreme and unforeseen market-altering events. Beyond price levels, keep a close watch on the qualitative aspects of the Fed statements and the forward guidance from tech companies. Always prioritize robust risk management strategies and adjust your position sizing to account for expected market volatility. That concludes our detailed QQQ analysis for July 30th, 2025. Don't forget to like, share, and subscribe to Explain the Charts for more expert market insights.